Hey everyone, it's Sean and welcome to Invest with Fire. This is the first video of a series where you can follow along with me trading options using a small account. And I'm going to be using low risk option strategies, mainly covered calls and cash secured puts. And I may use other option strategies such as leaps and bear call spreads only if I need to. I'm really excited to create this series of videos for you because the YouTubers and option traders out there, they don't actually show you the trades. You know, what they do is just brag about what they did and they just kind of hype you up and they try to sell you a course at the end. I'm going to actually show you every step of my trades. I'm going to use my real money and an actual brokerage account. And I'm really excited about showing you all this because I think trading options is a great way to make income. I'd appreciate an early thumbs up as it does help with the YouTube algorithm, and these videos do take a really long time to make. That being said, I respect your time, so here's the format of the video. Part 1, advantages of selling options. Part 2, disadvantages of selling options. Part 3, the mindset that goes behind trading options. And Part 4, I'm going to explain the rules with trading options using a small account. Part 1, advantages of selling options. The first reason that I like selling options is that I'm able to generate a monthly income using low risk option strategies. So I mainly like to sell covered calls, and with covered calls you're selling the right, but not the obligation, to purchase stock from you at a certain price. And because you're selling this right, you're getting paid premium for that. And so if you keep doing this over and over every month, you're generating a significant amount of monthly income each month to do this. And this strategy is pretty low risk because if the option expires, you still have your 100 shares of stock and you're able to sell a call against it again. Versus if you buy an option and it expires, you just lost that money. So this is why I like selling covered calls. So the next advantage of selling options is that you can do this in a lot of market conditions. Because you're getting paid that premium, you're able to have downside protection in your option trades. And if you're bullish about a stock, you can do out of the money, where you can actually make more money if the stock moves up. And if the option expires, well, you still have your 100 shares, you still have your stock, and you can sell another option against it. So this is a really great advantage of selling options because you can do this in most conditions. Because usually 90 to maybe 95% of the time, the stock market is just kind of going up and down, sideways up and down, right? Only in extreme conditions where it's actually crashing or if it's really going up. So this is another reason why it's beneficial to sell options. The third advantage of selling options is that you can control your trade with multiple exit strategies. So if you need to get out of a trade, you can buy back your call and sell your stock if you really needed to, you know? Or if you're making a lot of profit on your trade, you can roll up and out on your trade. So this is another advantage of selling options because you can control your destiny with selling options versus buying, holding a stock. If the stock is down, you're kind of just sitting there, right, with your hands on your lap, just waiting for the stock to increase. The fourth advantage of selling options is that it's somewhat passive. You know, nothing really is ever 100% passive, but once you learn how to sell options, it's pretty easy after that. I spend maybe about 15 minutes a day just checking my trades, and I don't even necessarily need to check it each day, right? You can set automatic orders to buy back calls and to exit out of positions if you really needed to. I really like that. For the amount of money that I make and the amount of time that I spend on it, I consider this a really passive investment. Part 2, disadvantages of selling options. The reason why we have the opportunity to make a really good return on our money is because we're selling the risk. With covered calls, you have to purchase 100 shares for one option contract. So you own those 100 shares. If the 100 shares were to go past your break-even point, you're losing money at that point. And that's why it's really important to have automatic sell orders or limits so that you know your profit and loss potential, right? You know how much money you could potentially lose on a trade. So that's the main disadvantage of selling covered calls. And the other disadvantages is that you're capped by your strike price. So if your stock price were to just increase past your strike price, you're not making that extra amount. You're getting capped at that point, which is fine, right? This is the mindset you need to have when selling calls. Your profit potential is limited by your strike price. So if the stock were to shoot up, you're not going to make that difference, right? If your strike price is at $50 and the stock increases to $60, you're not going to make that $10 on that difference in stock. And that's fine. And that's the mindset you need to go into when you're using low risk option strategies such as covered calls. Because you're mainly doing it to make income so that you can either reinvest it or use it for something else. The stocks that you pick are really important because they need to be appropriate for the strategy that you're using. And another disadvantage of covered calls is that you have to put in time, right? Trading options can be complicated and confusing. And this is why I created this channel, so that I can make it easier for people to understand so that they can make income in their lives. Selling options and trading options is like learning a whole new language. After you learn how to do it, I promise you, it's not that hard. And you could probably spend 15 minutes a day just managing your covered calls and to make that monthly income. So part 3, the mindset and the things you need to keep in mind when trading options, especially using low risk option strategies. The very first mindset you need to have is that when you're selling options, you're not trying to hit a home run, right? This is not a get rich scheme, okay? These are low risk option strategies. And what you're trying to do is hit singles and doubles, right? And keep adding those singles and doubles every month, right? And once you look back in the year, you're gonna be like, wow, I hit 200 singles and I'm an all-time batting champion. I'm just like Ichiro and I just keep hitting the singles, right? Getting on first base and maybe stealing second, right? And that's the mindset you need to have behind selling options, is that you're just gonna chip away, right? And keep adding on to your wealth. Another thing to keep in mind is that stock research is key, because we're taking on the risk of owning 100 shares of the stock, right? So we need to understand the story and the financials of the stock, because we're going to be having 100 shares if we're going to sell one contract to make premium off that. A lot of people, they kind of just depend on picking stocks by just on YouTube, or they hear like a stock tip from one of their close friends, or they hear it in the news, or they hear Jim Cramer screaming about like, you should buy this stock. We're not going to do that. We're going to actually look at the financials of a company, right? And understand the story and do a lot of in-depth research on a stock, because we're going to be shareholders of the stock, right? And we're going to have 100 shares. So if you're starting with a small account, that 100 shares is going to be a big percentage of that account. So keep that in mind. The next thing to keep in mind is that large institutions and hedge fund managers, they kind of control the majority of the stock market. Retail investors like you and I only have a certain percentage of the stock market. So these hedge fund managers, when they buy, it affects the stock market and it pushes stocks upwards. And when they sell, it's just the opposite. So we need to understand that these institutions are very short-term thinking. They only think maybe 6 to 12 months out. The reason why they buy and sell stocks is that they need to show that they made a profit on their balance sheets to the shareholders. And so this is why they trade stocks up and down. If your 100 shares were to decrease in price, we just need to just stay calm, right? Understand what is the condition of the market, and just understand that the institutions could just be selling a little so that they can show some profit for the stocks. So as long as the story is good and the financials are good, this just may be the institution selling stock. The last mindset to have when you're learning about options and trading it is that you can think of it as an education. And once you master and understand how to trade options, it's basically a skill that you can keep and use throughout your whole life. Once you learn the skill, you can generate monthly income, which you can use that income for whatever you want. And what I also love about trading options is that you can do for your computer from anywhere. So you're not dependent on a job in one location. You can move to wherever you want and trade options at that location. So part 4, the rules. The first rule is that I'm gonna be starting with $5,000 and I'm not gonna be contributing to this account. And I think $5,000 is a good amount to start with. You could definitely go lower, right? I think the absolute minimum you could start with is probably $2,000 to $3,000. And in the end, it all depends on the stock. If the stock price is $20, then you could buy 100 shares and start with $2,000. I generally like to pick stocks at a higher price point, because just to be more conservative. The higher the price of a stock, the less risk there is involved with the stock. But of course, it depends on the stock. There's a lot of volatility with penny stocks, and that's why I choose not to do this, because I don't like to use high risk strategies. when I'm trading options. The next rule is that I'm using Robinhood to trade my stock options because Robinhood has a very nice UI so that I can show everyone my trades and my profit and losses from my trades. And the third rule is that I'm only going to be using low risk option strategies. And those strategies mainly include covered calls and cash secured puts. And I also plan to use maybe bear call spreads and leap options if I really need to. But the primary option strategies I'm going to be using are covered calls and cash secured puts. And so finally, what is the goal? What is the goal that we'll know that we're successful when we're trading options with a small account? So the goal I'm going to set is that we're going to make $1,000 with like $5,000. And if we do that, that's a 20% return. And the time frame I'm picking is 6 months. So if I can make 20% in 6 months, that's really good. Annually, the stock market makes about 8% each year. So if I can make 20% in 6 months, you're just crushing the returns of a stock market. And what are you going to do with this money elsewhere? If you're going to stick it in your checking account, you're going to get maybe 1%, right, at the most, especially in these conditions right now. So that's the goal. That's how we're going to know if we're successful or not. So in conclusion, I'm really excited about this because I really don't know what's going to happen, and I'm going to document all my trades. I don't know if the stock market's going to crash, and that's going to slow down our progress to making $1,000. But I've been doing this for years, and I'm pretty confident that we can make at least $1,000 in 6 months with $5,000. Of course, just because I said that, I jinxed myself, but who cares if you actually learn from this? That's the value that I want to give and show you how to trade options. So that's it, everyone. I'm really excited about this, and if you want to follow along with me in trading options in a small account, consider subscribing. So that's it. Have a great day.